Hello and welcome to today's webinar, When to Hire a CFO, presented by Early Growth Financial Services. My name is Patty Montoya and I'll be your moderator today from the Early Growth team. I have a few quick notes before we get started. The webinar will last about an hour and that includes time at the end for questions. So feel free to type your questions into the control panel and we will answer them at the end of the presentation. Then is that this webinar will be recorded and sent to all registrants with the slide deck within 48 hours. You can also find the recording and all of our recordings on our YouTube channel, Early Growth. Now, before I pass this off to our speakers today, I'd like to tell you a bit about Early Growth. And here's a description of what we do. I also wanted to talk a little bit about the challenge that startups have and how we can help you. Now, without further ado, I'd like to introduce our panelists, Alaa Ismail and Sirk Alaa, who will tell us a bit about themselves and kick off today's discussion.
Hi everyone, this is Sirk Alaa, and I am a consulting CFO with Early Growth Financial Services. Welcome to this webinar. We hope that you will find this to be valuable information to you. I've been with Early Growth for a little over 6 years now, and I assist lots of different kinds of companies, hardware companies, software companies, SaaS companies, internet companies, and I do it on a consulting basis. Which is how we work. Prior to Early Growth Financial Services, I held VP of Finance and CFO roles at various tech companies here in the Bay Area.
Hello, everyone. Thanks for joining us this morning. My name is Alaa Ismail. I've been with Early Growth Financials almost since the start of the company, going over 10 years right now. I've had the fortune of helping a lot of companies go through the early stages and through their growth stage. Several of the companies I've worked for were in various areas from SaaS to e-commerce, software, hardware, and just general service companies as well. A lot of those companies I've had the fortune of seeing go from startup in a couple of cases to being a public company or having fairly large, significant presence right now in industry. Prior to Early Growth, I was a CFO at a couple of startup companies, very similar to what a lot of you probably are going through, and have led them through their growth phase all the way through IPO and eventual acquisition. And prior to that, I was in public accounting.
Great. So just as a preview of kind of what we're going to be covering today, we're going to be talking about what CFOs do on a day-to-day basis, month to month, year to year. We're going to talk and some of the roles that different CFOs have within companies. We'll talk about kind of the different things that CFOs can do to help startups drive growth. A lot of people think of CFOs as just being a financial person. I hope one thing that we will leave you with is that CFOs can and should be a bigger part of the role within your company. We'll talk a little bit about when it makes sense to engage with a CFO, whether it's an outsourced CFO firm like ours, or whether you're hiring someone internally. And then finally, we will talk a little bit about kind of the outsource versus the in-house CFO, when it makes sense to do one versus the other, and when might be an appropriate time for you to make a switch from one to the other.
Okay, so what exactly does a CFO do? We'll go over some of the items that that a CFO will do, but we'll focus really how would a CFO help an early stage or a startup company, and really the conventional thought is at the early stages, a senior financial person like a CFO may not be necessary. But I think once we review some of these items, you'll see the value that a CFO can add very early in your enterprise growth phase. Next slide, please. So one of the primary things that a senior finance person like a CFO can help is really be a good business partner to you. And these points really relay more on operations. So one of the things that early stage companies face is how do we plan our growth process? And really a CFO could help in that planning process, not so much, not only in the actual forecasts and financials, and we'll get into that later as well, but also be an integral part of your management team. So as you're deciding things like, product development, sales and marketing strategies, and so on, a CFO or a senior financial person could be a really, really integral part of that team by lending a business acumen to your overall management team. As I mentioned prior, they could help you crystallize your plans into a forecast, either a 3 or 5 year to 5 year forecast. So you could start developing your roadmap. A CFO could help when you go to market with your go-to-market strategy. Things like not only pricing, how to price and how to get adequate returns for your product, but also a strategy on different releases. For example, if you're in the software space, a CFO could really, really help in getting you maximum value, so you're not giving up a lot of value to your customers very early on, help you with your licensing strategies in an e-commerce type environment, help you with your margin analysis, and figure out really what the best way to go forward on that. There we go. And finally, I think the typical CFO will help you in the most critical area in startups is really the exit, whether and in the growth path, whether you're going to be acquired or you're going to be acquiring companies. And in both those cases, the CFO will be a critical partner. Next slide, please. The critical or the most standard role a CFO will help you in is the financial planning. Very early on, your financial projections, a CFO will help you develop. Not only will they just put the numbers together, but also kind of lead the communication to the external world, whether they're investors, bankers, customers, or your management team, on how those projections relate to the business model. A CFO will help you with managing the most critical aspect in your growth, and that's cash. So having ongoing cash forecasts so you could see where you're going and when you'll run out of money. And that will help in fundraising scenarios. You don't want to raise too much money and give up a lot of equity in your company. You also want to raise enough so you're not out in the marketplace raising money on a regular basis. So these rolling cash forecasts, properly developed, are critical. Having an operating budget so your team really knows, has a roadmap on where they're going, and that you could stick to commitments. An operating plan, I think, is very, very critical in all stages. A lot of folks think that in the early stage, it's more like, just let's get through the basics. But an operating budget is important at all phases in your company growth. And finally, if your growth involves some kind of debt, a CFO will be a critical help in managing that, and also in the related negotiations.
And I'll just add one other thing on this. The importance of having someone to assist you as the entrepreneur with some of this financial planning becomes more and more important in two areas. One is if the founding team is not as experienced with putting together financial plans and think about kind of all the factors that go into putting financial plans and cash forecasts and operating budgets, then obviously a CFO can come in and help ask the right questions, right, to make sure that the assumptions that are being used to pull the numbers together make sense for the company and match what the entrepreneurs, the founders think of what the company is going to be doing. And then secondly, obviously, as a business gets more and more complex, then that added complexity also requires more experience, expertise, someone who's kind of been there, done that many times or several times in the past, and has kind of worked through some of the issues and problems that we see. When we really look at what a financial plan looks like versus really what happens in the future in terms of actual. So in either of those situations, I think having a CFO to assist with the financial planning is really, really critical.
Great point, Sirk. And then finally, probably the most known aspect of what a CFO could lend is in the financial reporting. The financial reporting isn't just creating a balance sheet, income statement, and statement of cash flow and throwing it out there as a matter of just an exercise. It's really formulating it to help with operations. For example, creating a departmental structure in your financial reporting so you could help with your management focus on their specific area of responsibility and what the financial constraints or financial issues that they may have in their specific department. So financial reporting as it relates to your management team, a CFO could help structure that so that becomes a very, very useful tool operationally. And finally, getting a financial statement that makes sense and relaying that to outside, whether it's a board of directors, outside investors, or customers. A CFO could really help take your financials and summarize it in a way that makes sense to whoever is digesting those financials. And there's a lot of constituency that you will see that as you're in your growth phases of your company, of folks wanting more and more financial information from you, but a CFO could help kind of tailor and structure that financial information so that each constituent party that's digesting these financials could make the best sense out of it and gain the most value. Next slide, please. And then also fundraising. I think in the early stages, having an experienced CFO or a senior financial consultant is critical. There are a lot of complexity in financial modeling. And there's also accounting rules and so on that a lot of savvy investors are knowledgeable on. So having a seasoned, experienced CFO that could help present the financials in a way that makes sense to the investor community really, really is a great jumpstart for you, because you lend a lot of credibility and you give a lot of comfort to the investor world that your financials are going to be well managed and well understood. Also, when you're getting ready to raise the money, understanding the dilution and the related effect of the raise on your business, a CFO will really, really help you translate what the equity effects of that raise will be. And when you're raising money, you want to know how much to raise, so you don't dilute yourself or you're not raising money on a regular basis. So a good financial plan with a CFO that helps you in that structure will help you relay to the investor community when you need money and the different tranches that you may need during your raise process. And one of the more critical areas right now is debt negotiations. A lot of folks are bypassing the standard VC world for raising money and going into raising debt to finance their growth. And those discussions and the related effect to your business with either banks or other financial institutions, a CFO will be a critical partner on. So those are really the three areas that the general area: operationally, financial reporting and planning, and also fundraising and relationship to the outside world. Really, the key three areas that a CFO could be a really, really useful partner in your growth of your entity.
Yeah, thanks, Ala. And I think I saw on the earlier poll that we just took that I think several of you or many of you consider fundraising to be, maybe the main role of a CFO, especially with early stage companies. And I don't think that's incorrect. Obviously, we wear many hats, of which fundraising is one of them, but it's absolutely a critical one. And, if you really think about kind of the fundraising process, right, there's a whole bunch of areas. Ola's already alluded to, to the areas where a CFO is going to be able to help you in your fundraising process. But boy, I got to tell you, there's a part of it that really we want to touch upon, which is that ultimately when you're going through a successful fundraise, right, throughout the entire process, what you're doing is you're earning and keeping the trust of investors, right? Ultimately, an investor is going to say yes to you after doing all of the due diligence, if they are confident in you as a founder, confident in you as a manager, and confident in you as a business person, to be able to provide returns to them, right? And having a good CFO or having a CFO assist you throughout this process of putting together the financial plans, helping you with a board, the pitch deck, being able to walk you through the numbers and different scenarios and how you talk to financials with investors, that earns the trust of potential investors, and ultimately it's that trust and confidence that investors have in you that's going to impact the success of the fundraise. So it just if you're not at all sure about how the financials are being presented, if you're not at all sure about hey, if an investor starts picking and prodding into my financials or picking and prodding into my business plan, revenue plan, those kinds of things, and you don't feel 100% confidence in really being able to answer those confidently, then again, having a good CFO who understands you, the business, the industry, is going to be really, really helpful to you.
That's a really good point, Sirk. And I've in the real world right now, you'll see that a CFO really wears two hats. One is being part of the management team, and being somebody who could lend that business acumen to your management team, but also to the extent that you have a board of directors, a CFO kind of has a responsibility to the board of directors and investors as well. So you'll in the growth phase of all your enterprises, you'll see that a CFO is a slightly different member to your management team than, say, a CTO or a head of CRO or head of marketing, or that those roles. Board of directors tend to have a very, very more critical input on who you pick in your growth phase. And that just tells you the importance that a lot of boards place on having somebody that's a really good financial steward, that's somebody that they could trust. Because as Sirk mentioned, really investing in a company is also a big trust game from a lot of these investors, and they want to make sure that the money that they invest is somebody is a good steward of that funds and could relay that information back to them in an accurate manner. So just this is kind of just a general slide of summarizing exactly what are the benefits of having a good CFO on board. Next slide, please.
Okay, let's talk a little bit, now that we know, some of the roles and some of the activities that CFOs are engaged in, let's talk a little bit about, how a CFO might be able to help not only on the planning side, but also help to drive growth at startups. So next slide is really, this is the main takeaway that we want to leave you guys with, which is that a CFO is obviously an executive, but really should be maybe the key business partner that you have, right? And we obviously use financials, we use numbers, plans and actuals to help companies disseminate information as well as help companies grow. But ultimately, if you think about it, right, think about the other departments or executives that you have and that you will have in your company as you grow, right? There's obviously the founder, CEO who overmanages the entire business. You have, you can have an engineering team if you're designing product or services. That engineering team is going to be focused on, delivering product, right? And so, their sole focus is, okay, what resources do I need to get the product to where we need to get it to in the time frame that we have, right? You have a sales and marketing team, probably two separate teams, but in any case, they're chartered to bring in business, right? So the sales team and the VP of sales or a chief revenue officer or somebody like that is ultimately going to be responsible for bringing in revenues and to increase that revenue flow, right? And so he or she is going to want resources to allow him to do that. But he or she has this very, very specific goal, right? That is obviously helpful to the company, but he or she is driving under a certain goal that others are not as in tune with, right? And same thing with marketing, right? So the marketing team is obviously going to be chartered to get word out about the company, do advertising, do partnerships, do all kinds of things that's going to ultimately help the sales team sell more revenue. And so if you think about all of those things separately, these executives all have kind of this I guess this objective that aren't necessarily tied all together, right? The engineering team is focused on product development. The sales team is focused on revenue. The marketing team is focused on marketing and getting word out. The CFO now, and they're all going to come to you as the CEO and founder with requests for people, resources, money, time. All the important resources that we need to figure out how to divvy up properly to make the company successful in the long run, right? And this is kind of where I think the CFO's role really, really shines, right? If hopefully you have a CFO who's experienced, again, knows the industry, has seen this many times before, both positives and negatives at companies that he or she has been working with in the past, can bring that experience to bear on the decision making that we're doing as executive team members of a company. And so that's kind of the big takeaway. Okay, and so let's go to the next slide. Thank you, Patty. And so these are some of the things, and this is not to say that the CFO does all of these things. He or she should be able to assist you and the other executives in doing some of these things. But looking at just the again at a general business level, identifying the strengths of the company and targeting any weaknesses that we have, right? So again, going back to where a CFO is just not a numbers person, but a business partner, he or she should be able to assist you as the founder, and at least be someone that you talk with, to talk about ideas that you have and how to exploit the strengths that we have. How to minimize the impacts of any weaknesses that we have, how do we actually improve upon the weaknesses that we have. Understanding the market opportunity, clearly, the size of the market opportunity, what sectors within the market that we want to attack, and in what order, what kind of a time frame do we have? Do we have a small window of opportunity to really attack the market? Is this a slow rolling business opportunity where we might be able to take a little bit more time and be a little bit more not slow, but a little bit more targeted in terms of our approach and our spending to be able to address the market. These are things that you should be able to work with your CFO to understand. Obviously thinking long term, right? So it's very, very easy to focus on the short term, think about, okay, what do I need to do today? What do I need to do tomorrow? And as the CEO, you're going to be hit with all of these, this information that you need to make decisions on, that you need to work through. And sometimes it's really, really hard to think about, what do we need to do today to be successful, not only this month, this quarter, this year, but next year, the following year. What does our business look like 3 to 5 years down the line? And a CFO can help you do that, and to make sure that we're staying on the long-term straight and narrow instead of just the short term. Identifying strategic partnerships, to the extent that there are financial or business implications, and how do those strategic partnerships affect us, not only from a financial perspective, but from an industry perspective, from an employee perspective. Basically, again, as a general business partner with a lot of experience, should be able to assist you with some of those activities. Assessing management effectiveness, this is really, really key, and again, I think the CFO is the best person, is best situated to be able to assist you with this, right? And so because we have, because we are putting together the plans, and because we understand the assumptions that are going into the plans, right? When things aren't working the way they should, we're the first ones to see it. And so, we are the first line of defense, we're the first line of communication, and we should be the first line of discussion with you to kind of, work through issues, and I like to say work through issues before they become problems. And sometimes it's hard to see that, management is not effective. Maybe the marketing team, we're not getting the same ROI that we should be, or that we assumed we would get for the money that we're planning on spending. Maybe one group is hiring more people than we thought, and we're not getting the productivity out of the hires that we were expecting and that we had planned on, and that's causing us problems both short term and long term. And obviously, there are going to be some numbers that speak for themselves, things like revenue and time of product development and all those things. But again, at a high level, you might be able to sense that, but at a detailed level, it's really going to be the CFO who's going to be able to have that information, that's going to be able to discuss with you, again, as their issues before they become problems. Okay, these are some other areas that a CFO can help. Obviously, things like maintaining customer focus. This is, something that every company strives towards. We as CFOs will have, a limited part in this. I think there's going to be, customer service departments and sales departments and marketing, and a CEO is obviously going to be focused on customer focus as well. But again, just, looking at some of the numbers to help us with this kind of decision making is going to be helpful. As you look at, where do we put our resources, right, to drive growth, right? Is it, do we need to spend more on salespeople? Do we need to, extend our marketing efforts? Do we need to look at strategic partnerships? What kind of deals can and should we be doing? Are there new market segments and that we can go after? And when does it make sense for us to do that? So, looking at that portfolio of growth opportunities and helping to kind of, put our resources and our sense of urgencies towards the one that makes the most sense, both from a financial perspective as well as a strategic perspective, I think a CFO is best positioned to do that. One thing that is sometimes kind of lost in some of these decision making is impacts on some of the decisions that we have on current employees, right? And at a lot of companies, CFOs are very, very much tied in with the HR department, or with the HR group. And so we we see it, right? We see when there are issues with current employees as well as potential employees of doing things like hiring too quickly, hiring people without considering what it's doing to the current employee pool, right? Are they so stressed out that they would welcome hires, or are they going to feel like bringing in new people or getting into a strategic partnership with somebody might have might risk their positions in the company? And so just understanding some of those things, again, a CFO is primed and experienced because we've seen that and done that several times, and so we can make sure that we're not making that we understand what the impacts of some of our decisions on the current employees are. And obviously, we've already touched upon a key one on the fundraise, which Alaa has already mentioned. So those are some. I think those are some of the areas and ways that a CFO can assist with growing the company. There's going to be others, right? And again, I think that the main takeaway here should be that a good, experienced CFO again, is going to be that business partner to you, right? And the first person that you should be thinking about talking to as you approach any big decision making, any big initiatives that you have, because a CFO is going to be able to look at it from kind of the holistic viewpoint instead of a departmental viewpoint.
Okay, so the next is really when's the right time to engage with a professional services firm? Not so much just the CFO, but just when should you go out and get some extra help for your financials and accounting needs? I think there are some key kind of metrics or variables that you'll encounter that should automatically tell you it's time to get some help. Next slide, please. So if you've raised any amount of substantial money, whether it's convertible note or some kind of equity round, say over $500,000, I think that's the right time to come in. If you're essentially using others' money, whether it's through debt or through equity, that's the best time to do it. Sometimes you'll be forced to do this because as part of that, raising the money requires regular financial reporting, and you want to be able to do that in a professional, consistent manner and have related forecasts and cash flow analysis for them. So you might be forced to do this, but if not, I think if you've raised any kind of substantial amount of money, say over $500,000, that's a good time to consider bringing in some extra help for your finance and accounting needs. If you started having significant amount of revenue transactions, say you have regular revenue happening, I think that's a good time to bring in to bring a financial team, because now you want to be able to measure how that revenue is being recorded. You want to be able to collect it properly. You want to see the cash effects on it. So when you start generating revenue, that's a really great time to bring in a professional services or accounting and finance team. If you've raised money from an outside professional institution, such as a bank or a VC or any other kind of or a private equity firm, most of the time, that's the time that you really need to hire somebody to do your finance and accounting. And like I said before, that may not even be your choice. That may be a requirement that they have. And unless you have that expertise in-house, go out and get it, because you want to have the best presentation out there, and you want to be credible, and you want those institutions to have trust in what you're presenting to them. And if you have just a lot of activity, I've engaged with several companies that don't have any revenue, but they have a significant amount. They've raised money, obviously, but they have a significant number of transactions, and it's getting to the point where they just can't manage it anymore. So having somebody out there that could manage that process and generate financials for you on a regular basis is really the right time to go hire somebody. With a lot of transactions, you want to be able to get timely financials so you could see how you're doing, how much money you're spending, how much revenue you're generating, that kind of thing. And the more activity that you have, the harder it is to manage that without some expertise that could put in the processes in place so you could have accurate and timely financial statements. Next.
If I could just add a couple of thoughts to that. So that, when someone asks me, hey, when should we be thinking about bringing in outside help, accounting help or CFO help? There's two times when I say it. One, I say, think about your business, right? Think about what you're trying to do. Think about the core competencies. Think about what are the urgent things that you, as the founder / CEO and other executives, what are your priorities, right? And for most early stage companies, those priorities and the sense of urgency has to be focused on two things and two things only, which is product development and customer acquisitions. Right? Those are the two things that really drive the success of the company. And you, as the founder, you know how busy you are. You know how many stresses there are in your mind at all times. You're thinking about all these different things. And any time that you are not thinking and focusing on those two things, I think is time not being spent and resources not being spent wisely. Right. And so, if you're at the stage where you're spending more time doing things like this, if you're spending time in QuickBooks entering data, and you're trying to prepare financial statements that you're using either for management purposes, operational purposes, or to send that to outside parties, I would say that that's a bad use of your time. And working with a financial services firm is going to be very, very valuable to you. And then the second time, other than that, when someone says, okay, yeah, I get it. However, we're really limited on resources in terms of money. I recognize that it'd be helpful to have, outside help, but I'm not in a position to do that. And so I'm just kind of doing things on my own and getting by with what we've been doing. And it's just kind of the nature of the beast, and I have to do it. And I totally appreciate that, right? As a CFO, I don't want you to be spending money unwisely, right? Then in that case, then I will say that you will kind of know, right? Because you will hit, what I like to call the oh shoot moment, and I'll keep that for the family members out here. But you'll hit that oh shoot moment, right? When you realize that what you've been doing up until now is not sufficient. It's not sufficient in terms of you're spending too much time. You know that the numbers aren't accurate, and you don't know where things are going off. You don't feel like you've got an operating plan that you can really use for management purposes, or you're not able to fundraise with the documents you have, or that maybe you've got a loan out with a bank, and the bank is asking for financial information, and you're not able to provide the information that the banks want, for example. Or if you have outside investors, maybe you have family and friends investors who just ask you, hey, how are things going with the business? And hey, could I take a look at what financials might look like? Or certainly if you have institutional investors, you'll realize that what you've been doing up until now is no longer sufficient. And that's obviously a clear time when you're going to want to work with a firm like ours, or a competitor. I'm not saying you need to go with early growth, but just talk to companies who provide this level of service, and I think you'll realize the value that a firm like and a service like ours can provide for you.
Yes, and I always say this analogy, and I'm probably Sirk has heard it so many times because we've done this before. Accounting and finance is a lot like dentistry, where if you don't take care of your teeth early on, you may not think that you need to go to the dentist and everything, and until something happens goes wrong, and usually it's very expensive to fix and very painful. And I think accounting is in the exact same way. If you kind of let it go for too far without any kind of control, getting it back in line is usually a lot more expensive than it would have been if you had just spent the money early on, and very, very painful in that it may delay or restrict your ability to raise money. And I'll give you a few examples. I had a client who was a very, very successful SaaS company, and they thought, well, we kind of know what's going on. We're not really worried about financial reporting. We know the money that's coming in. We know the money that's going out. And we have our tax guy do our taxes at the end of the year. Well, as the business grew, they had interest from the outside world for acquisitions, and they wanted financials generated on a GAAP basis, meaning that the revenue is no longer recognized when the cash is received, but when it's earned, and expenses when the expense is incurred, not paid. And they, as a requirement, they needed to go back and recreate financials for several years. And that was a very, very tough process. It took a long time and required a lot of outside resources on their part. Had they done this kind of from the very beginning, I think the overall cost would have been a lot lower, and that transaction would have flown a lot quicker. So you think about the cost benefit in the accounting and finance process, and I think you'll see that the earlier you kind of get control of that, the better. So here's just kind of a slide that shows the different financial infrastructure that you'll need, and really what a company like Early Growth can help kind of put together in a kind of an integrated approach. You obviously have the financial aspect of it, which is your bookkeeper and CFO will help you with, but you have the payroll element of it, or the HR element, and a company like Early Growth or a financial services firm will help kind of integrate those two. The other aspect that, of course, you need to take care of is taxes, whether it's on the payroll side or just the general income tax reporting, state, federal reporting. All that kind of goes hand in hand. And one of the other things, too, that a company like ours would help is the valuation. If you're a valuation firm, whether it's for external purposes, you're trying to sell your company or trying to acquire a company, or for statutory purposes. If you have an employee stock option plan, the IRS forces you to get an independent valuation called 409A on at least an annual basis. So a financial services firm like Early Growth can help kind of put all those pieces together for you. And so it's not just the monthly or quarterly financials. There's a lot of different aspects that encompass the service that a finance and accounting firm can help with.
And then, we didn't, and I know this is the last slide, Patty, but one thing that we didn't touch upon in the slides itself is kind of the last point on the review section, which is kind of the internal versus outsourced, and when does it make sense to do one versus the other, right? And I think it's going to be, you're going to have this trade-off, right, between I guess ease of starting and the cost. Versus in-depth experience and knowledge, and full understanding of what your company's doing and how you're planning on leveraging that CFO. So early on, obviously, it doesn't make sense to hire a full-time CFO, right? And it probably doesn't make sense for you to hire a full-time accountant, right? Many small companies start off with like an office manager who's able to do a little bit of light bookkeeping, who's able to do some invoicing, maybe to even enter payroll, and then they work with an outside firm to kind of assist with preparation of the financial statements, making sure that the close is being done, the monthly close is being done accurately, GAAP compliant, which is the generally accepted accounting principles, which Ala just alluded to in terms of like recognizing revenue when they're earned rather than when we get paid, and vice versa on the expenses, and those kinds of things can be done for very, very cheaply using a part-time or an outsourced firm like ours. And same thing with a CFO, right? Initially, you're not going to want to hire a CFO full-time. They're very, very expensive, and to my earlier point about using resources wisely, hiring a CFO until later on in your life and growth cycle isn't going to make much sense to you. And so early on, when you have that need, when you know that you really need some accounting services and maybe some higher level financial and business experience partnership, then hiring an outsourced firm like ours or others will be very, very valuable to you. When you decide to go from that to a full-time hire is just going to kind of depend on your needs, right? A firm like ours, so I would say there's probably like 3 stages that you're going to want to go through, right? The first one is where you hire, an early stage a company that helps early stage company like Early Growth Financial Services, right? Then at some point you may get to the point where, man, I'm using these guys a lot, and I know they charge by the hour, and boy, maybe I might get to the point when it makes more sense, instead of hiring someone on an hourly basis, I might want to hire someone on a part-time basis, right? 2 days, 3 days a week, and that's what we call kind of partial CFOs, and at some point it may make sense for you to go that route for a certain amount of time. And then obviously, if you get to the point where your financial situation supports it, and the need is there to have someone full-time who's going to be able to manage it, to be able to grow the organization internally, the financial and accounting portion of the company internally, then that's when you're going to want to transition to a full-time hire. And so, there's no set timing of that. There's no revenue number that you have to hit for this to make sense. It's just more on an individual company's basis and where they are and when it just makes sense. I think by the time you get to that point, when you start asking the question of, does it make sense for us to hire internally, it'll become pretty evident to you that what the answer is.
Thank you, Sirk. I think we have a couple of questions that we would love if you can answer them. The first one is, what's the difference between a CFO versus a CPA?
Yeah, Ollie, you want to take that one?
Sure. Yeah. So a CPA is generally somebody who knows either could just be tax focused, and have the CPA designation, somebody who's done audits and taxes but has had no operational experience at all, meaning that they've not been part of a company. They've just been kind of helping companies from either audit their books or generate their tax returns, but really have had no operational experience in running a company. So in the standard terms, you go out and get a CPA firm to help you do your taxes. You go out and get a CPA to audit your books to make sure that the financials are done technically correct. That CPA may not have kind of the experience in running your type of business. They may not have had, all the different aspects day to day, payroll, HR, operating budgets for sales and marketing and so on. So a CFO generally has more operational and business acumen. A CPA is more of a technical accounting resource, whether it's in tax or in general accounting. So those are the biggest. Typically, when a company is first starting, you might hire a CPA just to do your taxes. But then that CPA is on the taxes, not really as focused on the financial presentation from your operations and business needs. They just want to make sure that all the debits and credits align and that they have the right information for the tax preparation. That may or may not be what you need to manage and run your business.
And that's not to say that a CPA can't be a CFO, right? And in fact, a lot of CFOs are, did work at CPA firms and receive the CPA designation, both from a testing perspective as well as the number of hours that they need to put in doing some of these other, types of activities. And so obviously they have a well-grounded foundation in accounting and finance. And so then if that person is also able to gain the experience on an operational perspective, I think a lot of companies find it useful to have a CPA who's also the CFO. But Ala's description of the kind of the major difference between the two acronym titles is spot on.
And there's also interdependency. The CPA or an outside firm will depend on the internal finance team in doing an audit or a tax for a lot of different aspects to do their work, and a CFO will have also a lot of dependency for the CPA. In larger firm environments, I've leaned on my outside accounting or CPA firm for technical advice all the time, just because it's very, very difficult to be, technically up to date on all the different accounting pronouncements and so on. So having that outside source, the CPA, that helps the CFO, and then the CFO or the internal finance team really helps the CPA in things like tax preparation and audits.
Ala, we have another question for you. You mentioned that CFOs are not just great at creating financial statements, but creating them according to department structures. Can you explain more on why by department structures is important for financial statements?
Yeah, so when you're running an organization, you don't want to just know that slide that we had, revenue, gross margin, operating expense, net profit. There's a lot more granularity involved. So a CFO could help you create a chart of accounts and a reporting structure that focuses on the different operational areas. For example, sales and marketing. Their expenses are going to be very, very different than the expenses for your R&D or your engineering department, and the G&A function is going to be very different than those. So, creating financials that are just not that have a lot more granularity, that help the different departments understand and manage all their costs, is in my opinion very, very important. Finding out that your contractor cost is $100,000 in a particular month overall is not really helpful for you as in engineering, unless that $100,000 is all your cost. So you want to be able to break that down and provide the financial reporting that each department needs. In addition to that, it's not just debits and credits and financial statements, it's also metrics. A CFO is really, really key in developing the metrics that help you run the business, and that's like something like either revenue per headcount or per payroll dollar, or in the SaaS world things like CAC, your customer acquisition cost, or your ACV, your average contract value. Whatever the metrics are that are important in running your business, having the CFO kind of slice and dice that to the different departments that are just outside of the normal balance sheet, income statement, and cash flow statement, I think is really, really important. And having the insight to do that is something beyond what, say, an outside CPA might offer. Somebody with an industry experience that is able to generate the metrics that are useful for you to run the business, that's a really important factor.
The other question we have is, if a pre-seed company wants to hire a CFO, how much equity should they give them?
Well, that there isn't a right answer to that. I think what you're going to want to do, because first of all, the amount of equity that you give to any employee is going to be dependent on the stage of the company that you're at. The earlier you are, the more equity you tend to give. The later you are, you give less and less part of your equity, partly because a lot of the equity has been taken by outside investors, right? So timing, stage of the company is going to be important, and obviously other things like how strong of a negotiating standpoint are we in? Are we a high flyer where people already feel like the equity that we get is going to be valuable in the future? Then obviously we have more leeway to give less. What's competition like? Boy, there's so many factors involved. What I would suggest to the person who asked that question and those who are interested in finding out is, do searches, right? Do searches of kind of like common, equity grants to certain positions, at different stages. And I think that you'll be able to find stuff online that at least gives you a guideline. But boy, there's just so many factors, it's just impossible to give you a number or a percentage. And I see, and I just want to just touch upon, I believe Valerie asked a question on the chat, asking the difference between a CFO and a COO, as opposed to a CFO versus a CPA. I just wanted to touch upon that really, really quickly. So I think the way that I was describing, how a CFO can help a company grow, it does, it does beg the question, well, isn't that some of the stuff that a COO does? And absolutely it is. I would say that part of it is, again, based upon timing, right? So early on, you're not going to be hiring a COO, right? You're going to be hiring, hopefully, someone who can wear more hats. An early stage CFO can help you do that. As a company matures, and as there needs to be more emphasis placed upon each of the different functions, where a CFO now is going to be really focused on growing his or her organization, both from a reporting perspective as well as a financial planning and analysis perspective. Then you might think about hiring a COO or bringing on a COO who can help with kind of general operations of the company, and that person can be overseeing, and there's probably going to be some overlap. But again, it's more like a difference in title. I would definitely say there's a bit of an overlap. Early on, you're probably going to have a CFO who's doing both functions, and then over time, what you're going to probably find is that you're going to want to carve out the operations piece to someone who's focused on day-to-day operations. And letting the CFO focus more on kind of strategic growth initiatives and financial planning and analysis.
Yeah, I think, Sirk, that's a really important, I think it changes a lot from different stages. Very early on, a CFO is probably closer to a COO very early on in your business growth. Sometime in the middle, especially if you're a very technical firm, say you're an engineering-driven company, a CFO may not be the best COO of the company. Just maybe they're just not technical enough or don't understand your product, and that's really the critical aspects that you need in your COO right at that point. Later on, as the companies get bigger, you'll find that a lot of public companies, when things are in trouble or when things are in flux, the CFO steps into the COO role, just because larger companies are not as technical proficiency in specific areas may not be as important as overall corporate knowledge, and the CFO tends to have that knowledge in much later stages. So I think the answer is it varies, and in early stage companies you will find that the CFO kind of takes over that role of COO.
Perfect. The last question we wanted to touch upon is, if you're not ready, if you don't have the money to hire a CFO, what should you hire before that?
I guess it kind of depends, right, on what your needs are. If you are really early stage, where like you haven't really raised outside investment, you're just using your own capital and you're coding in the background, and you're trying to get a product done, and you're really doing everything that you can to save money, then I would say you probably don't want to hire anybody. Right, maybe you hire a really someone on an hourly basis if you think it's going to be useful, to just get QuickBooks set up, right, and to make sure that that we're accounting for the expenses and the transactions that you have from a financial perspective, and making sure that that's getting entered into an accounting software system, so that when you are ready to hire someone, then they can take over that process and feel confident that at least generally the transactions have been accounted for correctly. I'd say that you might get away with with a lower level person, but boy, hiring an hourly CFO, I think you'll find can be really cheap. And so as soon as you get to the point where, oh boy, I'm really uncomfortable with how I personally am keeping track of expenses, or I don't feel like I have the finger on the pulse of kind of in terms of what we're doing. And as soon as you have any resources that you need to be keeping track of, then talk to firms like ours. And I think you'll find that that is really cost effective. It's not a case where you're going to be spending thousands of dollars a month just to keep your books accurate. I think you'll find it to be a lot less expensive than that, or it can be a lot less expensive than that if done properly.
Perfect. I think this is all the time we have. I know a lot of people have other questions, but we need to wrap up. Thank you so much, Sirk and Alaa. Just a quick reminder, I will be sending the recording of this webinar and the pitch deck just for your referral, and we'll be uploading it to YouTube in case you want to watch it there. Once again, thank you very much.
Thank you, everyone. We really appreciate your time.
Thank you.